866-300-9298, 866-300-9298. I'll let you know how things open. We are expecting some housing numbers to come out today, so we'll see if that has any impact on the markets. But right now, it looks like everything's going to open in negative territory, so we'll watch that closely. 866-300-9298. You're listening to Financial Issues. I'm Dan Celia. It's great to be here. Let's get to the phones. Let me go to Michael. Michael's calling us from Ohio. Hey, Michael.
Good morning.
Good morning.
My question, sir, is what percentage of one's portfolio do you feel ought to be in precious metals?
Well, excuse me, Michael. I don't want to see any more than 15%. That's for certain. So I don't want to see that. But I think probably anywhere from 8 to 10% is a pretty 8 to 10% is a pretty good number.
Notes?
What's that?
Do you have a thought about CUSIP notes? These companies, Sprint Communications is offering 11.5% note.
Yeah. I don't like them. I wouldn't get involved in them. They are not going, here's the deal. Let me just say this about them. Use Sprint as an example. Sprint is paying 11%.
Yes.
On these notes. The reason Sprint is paying 11% is because Sprint can't get a loan because of their debt, their credit rating, so on and so forth. There's no way that Sprint or any other company wants to pay out 11% for the loan that you might make them. They have no choice. It's the only way they're going to get it. So, that's a red flag. It's they're not rated very highly, to say the least. So if there's ever an issue, they're gonna go first. So I would stay away from a little bit too much risk.
Okay. All right. Thank you very much.
Sure thing, Michael. 866-300-9298, 866-300-9298. If you got a question for us, whether it's a financial question, if you got a comment about anything in the news right now in the economy, we'd love to hear from you. 866-300-9298. We're going to wait and we're going to see how the markets open. But let me just quickly get to the commodities market and take a quick look and see what oil and gold are doing, if I can get to that. But we'll get a look at that. 866-300-9298. It looks like, here we go. Oil is at 97.05 right now. That's good news. It's off the 98 and some change. It is down from yesterday, but it is moving upward from the close of 97.05. So that is moving up. It's up about 32 cents right now from where it was. It was below 97. We're looking at oil. Oh, I'm sorry. How about this? Natural gas, which I've been talking about for a while, doing very well. Natural gas. Oh, it was $5. It's at $4.95 right now, but it's positive. It's moving upward, and it's looking like it's going to go to $5. And I had said yesterday, man, I'm hoping that we see a $5 move on gasoline. In the last 5 days, if you look at some of the natural gas companies, the two big ones would be Chesapeake and what's the other? Cabot. They're up over 5%. In the last, both of them up over 5% in the last couple of days. So last 5 days. So natural gas doing well, and it's at $4.95. That's the highest it's been in a long time. Gold is sitting at $12.66. Silver is at $20.15 right now. $20.15. So that's good. All the agricultural commodities in negative territory right now, with the exception of live cattle. Cattle is up again, and it's been up for quite some time, so that continues to move upward. But the rest of the agricultural commodities in negative territory right now. 866-300-9298, 866-300-9298. Let me go to Jay. Jay is calling us from Virginia. Hey, Jay.
Hey, Dan, I got a question. I used to work for Verizon for a long time, so I purchased a lot of their stock. And in my say my 401k, because we ended up getting bought out by another company. I have a lot. It's like I think 28,000 in Verizon stock, and it's a big part of it. I guess I get 70,000 in the account, and I'm just wondering if I should try to sell a bunch of that off and get into something else within that fund.
Well, what percentage of it is this in your 401k, Jay?
It's in my 401k, so it's like $28,000 in like an account that's got about $68,000 in it.
Yeah, I would probably move, half of it. Verizon stock did about 11% last year, but pays a good yield. It pays like 4.5%, give or take, maybe a little less than that, but pays a decent yield. I don't track Verizon stock. I know it. Obviously, I used to. It used to be a stock that I had for 20 years. For biblical reasons, I don't have it on my list anymore. But know the company, know it well. I look at it obviously from time to time, as it's a big part of that sector. So. I don't think that we're going to see a whole lot of out of Verizon, but I don't like the fact that you have such a big position in it. Here's the thing. If you're making contributions every pay into that, you still work for the company, Jay?
No,
Okay.
Now I work for Frontier because we were like, they sold the state or whatever, so I don't make any more contributions into Verizon stock.
Yeah, have you thought?
I've had for about, about several years now, but I haven't made any contributions to the Verizon stock for, I guess, 4 years, 3 years, something like that.
So have you thought about rolling this account over to an IRA account that you can kind of control?
No, it's still within the same 401k. It's kind of weird how it works because even though the company we were bought out, now I just make contributions to, say, our 2040 fund.
So are you able to roll this over into that 401k? Will they let you?
So I can sell the stock and then, I guess, within other funds in the Fidelity. That's what it's through, Fidelity.
Yeah, I would sell everything. I mean, what I'd like you to do, and what I was getting at, is it would be ideal if you could move that in to all of it into your current that you're contributing to on a regular basis, 2040 fund. That would be ideal if they let you do that.
When you do that, you do it all at once and then do it, or do you?
Yeah. No, at this point, I would do it all at once. It's a 2040 fund. It's relatively aggressive. You're contributing every pay, and I would assume that you've got a long time before you're going to retire. So, yeah, I would.
38.
Yeah, so I would move it all right now at once. Now's a good time to move it. You don't want to give up some of the gains. Verizon's down this year so far by about 1.5%. So you've already lost 1.5% on it over last year. So I wouldn't wait. I would move it all over. And if you can roll it over and combine it in with that 2040 fund and continue to contribute to it, that would be a good thing to do. And that's what I would do.
Okay, I appreciate it, Dan.
All right, Jay, thank you, man. I appreciate it. 866-300-9298. Let me go to Jeff. Jeff calling us from Mississippi. Hey, Jeff.
Hey, this is Jeff.
Hey, yeah, I got.
I'm a little loose out there, but anyway, thanks for taking my call. I have a quick question for you. In the days of Al Capone, a reporter asked Al Capone why he didn't put his money in the stock market, and Al Capone said because it's a racket.
Mm-hmm.
Not saying I would trust anything that man had to say, but it got me thinking. Are there parts of the stock market that individuals need to stay away from that are nothing more than a racket? I know that the stock markets, there are stocks out there that, like penny stocks, and some of those stocks, to me, after looking at some of those stocks, they seem like they could be a little fishy. And I want to make sure that in your mind, playing some of those stocks is not just simply gambling or a racket, so to speak.
Mm-hmm.
What is the difference between buying and selling stocks and just simply gambling on something?
Okay. So here's the thing, Jeff. It's not gambling. When you buy a stock, you take ownership, and you have agreed to take ownership in a company. Right. It's a very different scenario. You're not just saying, I got this money, I think I'll flush it down the toilet. I mean, which is,
Right.
gambling. Or I'm taking a bet. I'm taking a risk that, that luck, so to speak, is going to be on my side. I mean, so it's totally different. It's not gambling. It is taking ownership of a particular company, whether you have 10 shares or you have 1,000 shares. So that's one thing. Is it a racket? No, I wouldn't call it a racket. Would I say that certainly over the last 10 years, the markets have the potential and probably certainly have been in the last 4 years, manipulated? Yes. They've been not manipulated because the market in and of itself is a racket, but manipulated because the companies in which you own and the companies that you're buying stock in are, in fact, manipulating their balance sheets, in my opinion, with free money, buybacks, and so on and so forth. And there's a little bit of a manipulation going on there. And the other thing about the markets that's very different than it was 20 years ago is that there are these huge hedge funds and institutional investors that, can move the markets. Now, there are rules, regulations that don't allow them to move the markets all that quickly, but nevertheless, they can. But having said all that, I think that if you stay with the good, solid companies, I don't do penny stocks, never would, never have, never get involved in any kind of penny stocks. I wait for a company to grow up and be a viable company. The problem with some of those very inexpensive, those penny stocks, are they do have potential, and maybe one in 2,000 might do okay, but they're also controlled very easily by a very small group of people that usually started the company and own the majority of the shares. And they can make a move one way or another that controls that. So that's another reason. But I think as long as you stay in good, solid companies that are going to continue to do the top 100 companies of the world, I think it's wise, it's smart, it's prudent, and I think everybody should own a little bit of stock in their portfolio almost at any age. 3 years ago, I said that everybody, it was 3 years ago in January, I said that everybody should have energy in their portfolio. And I still believe that. Very seldom does something that I say like that ever last 3 years, but it's still the case today. And I think it's going to be the case for the next 5 or 6 years before we see some sort of leveling off. But I think if you have good, solid domestic companies, we can all say, myself included, what we want about the U.S. and about the U.S. economy. But the fact of the matter is, we are the best looking horse in the glue factory. We may be in the glue factory, but we are better than most out there. And our companies here are, believe it or not, the vast majority of them are a lot less corrupt than some companies in other parts of the world. So I'm a believer in it. I just think you have to be wise. And if you're looking to get rich quick, then play the lottery and just stay out of the market.
Right. I noticed that a lot of guys, and I do apologize, I noticed that a lot of guys are buying and selling stock now instead of buying. They're not investors. They're not holding the stock for any amount of time. They're buying it when it reaches a profit, and they sell it, and then they look for something else. Mm-hmm. Is that something you would recommend, or would you rather be an investor instead of a trader?
No, I'm an investor. I've always been an investor. And as I was a trader and managing hundreds of millions of dollars, I was still an investor. And that my goal was to invest in the future for an individual or, an institution that I might have been managing money for. It was for a long-term investment. And, do people make money from time to time? Yes. Do people follow me, follow my website, and do they make money in the short term in a month or two? Yeah. But that's not what my analytical work is based on. So would I do that? I would say this. If I buy a stock for a long-term investment, which is the only way I buy stocks, if I were to buy a stock for a long-term investment, and in the next 6 months it goes up 75%, I'm probably going to sell it. Now, I'm not a short-term trader. It's not what my intention was, but I'm not going to maybe totally turn my back on a 75% run-up. So, it's never going to be my intention. And that scenario that I just gave you has probably happened more in the last 4 years than it has happened in the last 14 years. So there is a lot of that going on. There's a lot of people that have stumbled across that way of making money in the last 4 years that think they're just going to keep on doing it. Now it becomes where you're gambling on a number of different factors in the economy, in the markets, and in what other traders are doing, instead of really looking at the fundamentals of a company that I plan on owning for the long term.
So much. You've answered my question. Thank you.
All right. You're welcome. Thanks, Jeff. 866-300-9298. Let me go to, you know what, Robert from Texas. Hang in there, Robert. We're going to get to you after the break, but I'm right up against this break, and I don't want to have to cut you short. Right now, the Dow, folks, is down 107. 107. So we're down over 1% yesterday. We are not in very good territory. The NASDAQ is down 30, the S&P down 13, but the Dow down 107 right now. So we'll have to, as usual, we're going to wait and see what happens at the end of the year, at the end of the week, the end of the day, and we'll see what happens. Next week is going to be a relatively low volume, stagnant week, in my opinion, because we're going to be waiting for the job numbers, the January job numbers, and that's going to be the big news. 866-300-9298. You're listening to American Family Radio Network, Financial Issues. I'm Dan Celia. We'll be right back.